In this video, I'm going to talk about 7 5G stocks for the next 5G revolution in communication. Hey everyone, welcome back to FiscalVoyage. My name is Felix, and today's video we're going to talk about 7 different 5G stocks that you guys should look into. Some of them are undervalued, and some of them are overvalued, and some of them are fairly valued. And these 7 stocks, I personally own 4 of them. And I would like to add one more, but I think it's kind of overvalued. And at the end of the video, I'll tell you which one. But before we get started, if you're new to the channel, make sure to hit that subscribe button and like this video as well. And check out my free ebook in the description below, 5 quick metrics to look for before you spend hours in researching any company. Company to look at, AT&T. Morningstar gives it a 4-star out of 5. It has a fair value price of $37 and currently at $28.51. It means there's a 23% discount. If we look at the debt to equity, is decent at 1.09. Interest coverage is fair at 3.05. Earnings is high here, but I think because Morningstar looks at GAAP earnings instead of adjusted earnings. Price to sell is decent here. So let's look at the fast graph for AT&T. Here's a fast graph for AT&T. As you can see here, the company tends to follow the blue line of a normal multiple of about 14. You can see here it's way under that at 8.65 PE. But if we shorten this time period, the multiple does change from 14 to 12.77, which I think is more reasonable. But based on that, AT&T does look undervalued based on the fast graph, as same as the Morningstar fair price. So this is definitely a good opportunity to purchase shares. You can see here the dividend yield at a very high rate of 7.3, adjusted earnings yields at 11.6. You'd like to see this at 6.5%, 7% and higher. So that's good. It's an investment grade company, a BBB S&P credit rating. Long-term debt to cap is modest here at 47%, but overall AT&T does look good. So let's go to the second 5G company. So here's the next company for 5G, Verizon Communication, ticker symbol VZ. Morningstar gives it a 3-star out of 5, which means it's probably fairly valued. Yeah, they have a fair price of $59, and last close was $59.82, so it's slightly higher than the fair value price. Does have a narrow economic moat, which is decent and good. The debt to equity is higher than AT&T, as we saw, almost a double, but they have a nice interest coverage at 6.08, so that's good there. Price to sell is decent. Earnings looks good. Price to book I think is pretty high than the 5-year average. Let's look at the fast graph for Verizon. So you can see here the company tends to follow more or less the orange line, I would say. With a normal multiple of 13.5. If we look here and shorten this time period, you can see it changes at about 13.3 multiple, and it's right there, just like Morningstar suggested, that's fairly valued. So it looks fairly valued based on fast graph, but you still have a nice annual rate of return of 9.1% going forward. The nice dividend of 4.2%. BBB plus credit rating, investment grade, but it does have a longer, higher long-term debt to cap versus AT&T at 63%. Earnings, adjusted earnings yield at 7.899 or 8%. Again, higher than the 6.57% earnings yield, so that's positive there. So overall, Verizon does look good. It looks fairly valued currently, as we saw as Morningstar as well as the fast graph. AT&T looks to be a better buy out of the two. Let's go with the next 5G company. So here's the third 5G company to look at, Comcast Corp, ticker symbol CMCSA, has a 3-star rating versus 5, so it might be fairly valued, but it has a good economic moat of wide, so that's positive there. You can see here Morningstar has a fair value price of $47, last close at $46.19, so it's right there at fairly valued. Let's look at some of the balance sheet. Debt to equity ratio is decent at 1.25. Interest coverage is very well covered. So that's positive there. Price to sell looks good. Earnings looks price to earnings looks a little high there at 18.6. So look at the fast graph for Comcast. You can see here there was some overvaluation in the early 2000s here. but then it started to be fairly valued in the end of 2008, 2009, and that's when the price really followed the earnings because the company was growing earnings at a very nice rate. You can see here 16%, 29%, 28%, 19%, and so on throughout 2012 all the way to last year. Right, really, they increased to 23% in 2019. Of course, with the economic shutdown and all the things that's going on, earnings is going to be down negative 23% for the year for fiscal 2020. But 2021 is expected to jump up at 22% and 17%. This green dot represents my buying position, so I'm up very nicely with Comcast. But it does look to be fairly valued currently based on the fast graph and as you saw the Morningstar report. But even at the fair price, because earnings is growing at a very high double-digit rate, you can see here you have a nice total annual return of about 15.1%. And while it's giving you that 15% annual rate of return, you have a decent yield, which is higher than the S&P 500 at almost 2%. The blended adjusted yield is lower than my criteria, 6.5 or 7 and higher. But that's, even then, you still have present a decent rate of return, about 15%. Great credit rate of A minus, so it's investment grade. Debt to cap is pretty high here at 54%. But overall, Comcast does look good. It looks fairly valued right now. Maybe think about put it in your watch list and think about buying it at a nice dip, maybe around $42, $35 a share would be a great buying opportunity. Right now it looks to be fairly valued. So let's look at the next 5G company. The next one here is Nokia. I'm sure you guys remember Nokia. I personally had a Nokia in the early 2000 range with the standard phone from Nokia. But Morningstar provides it a 4-star. It says it's undervalued with a 22% discount. Fair value price at $5.10. Last close at $3.98. It doesn't have a moat like the others we've seen, so something to consider there. If we look at the debt to equity, it looks good at 0.45 ratio. Price to sell is really good at 0.8. So that's positive there. The price to earning does look high here. Let's look at the fast graph for Nokia. You can see here Nokia earnings is a lot more erratic versus the last 3 that we saw with AT&T, Verizon, and Comcast. But it looks like analysts, if we erase all this here, analysts are expecting a decent earnings growth of 22%, 20%, and 12% over the next year or two. So it has potential for growth. The company has a B plus credit rating, which is not investment grade, so something to consider there. The earnings yield is better at 7.04. The dividend yield is at 1%. But it looks like the company doesn't have a dividend here yield. Make sure to look into that before you consider Nokia here. So let's go look at the next company. So the fifth 5G company is Ericsson, ticker symbol ERIC. Morningstar provides a 3-star out of 5-star rating. Basically fairly valued. The fair price at $10.70. Last close at $10.87. Economic moat, none. Let's look at the balance sheet here a little bit. Debt to equity at 0.6, which is fair. Price to sell is a good ratio at 1.4. Current ratio is low here. The price to earnings is extremely high. So let's look at the fast graph for Ericsson. As you can see here, earnings has been very erratic. There's been down years, negative years. As you can see here, 2017 had negative 0.51 cents a share, but then picking up, and then as you can see here with the 5G revolution, earnings expected to be much higher at a 578% increase for 2020. So that's very positive there. So that could definitely drive up the price. But if we shorten this time period, it looks to be undervalued, but this does provide a PE around 120, which I think is very, very high. But you can see here earnings are expected to be higher. So 31% for 2021 and 14% in 2022. So because of the 5G revolution, Ericsson's earnings expected to be much higher. So that's very positive. So this is another company to consider. So let's look at the fifth company. All right, Qualcomm, the sixth company, ticker symbol QCOM. Morningstar provides a 2-star out of 5, so that means it might be overvalued. Fair price, Morningstar provided at $90. Currently, the price at $113.82. It does have a narrow moat, which is positive. Let's look. Debt to equity is high at 4.82. Is very high compared to the other, but is very well covered with an interest coverage of 6.2. Price to sell looks high, and price to earnings is high. Current ratio looks good at almost 2, but it does look overvalued based on the quick look here at Morningstar. And if we look at Fast Graph, the orange dots again are my positions of when I bought shares. So I'm up very nicely here. But you can see here earnings is much better than the Ericsson and Nokia. And you can see the company tends to follow the blue line. So it looks to be undervalued in this long term. But if we shorten this, it looks to be fairly valued to even overvalued based on the Fast Graph as well as the Morningstar. As you can see here, you have a total annual rate of return of about 3.5%. The earnings yield is low at 3.42. The dividend is nice at 2.28, but it is much higher than the 5-year average. Great S&P credit rating of A- with investment grade. The debt to cap ratio is high. As you saw, the debt to equity ratio was high as well. So they do have a lot of debt for the company, but they do have a good S&P credit rating, and the interest coverage looks good. But based on the Fast Graph, it looks to be fairly to overvalued here, as well as the Morningstar's expectations. The next one, I've talked about Skywars Solution a few times. I made a couple videos about this company. Skywars Solution, ticker symbol SWKS. Morningstar provides a 2-star out of 5, so that means it's slightly overvalued. Fair price at $117, currently is at $139. It does have a narrow moat, so that's positive there. Debt to equity is very low, so that's great. So they basically have no debt. Price to earning is pretty high. Price to sell is pretty high as well. But overall, I think they have the best balance sheet out of the 7 so far that we looked at. So let's look at the Fast Graph for Skywars Solution. You can see here, Skywars has had tremendous earnings growth over the past years. You can see here 47% growth, 63% growth. Last year for 2019, they had a negative 15%, and 2020, analysts are expecting a negative 6% growth. However, with the 5G revolution, they're expecting high teens growth of 19% for 2021 and 18% in 2022. So that's very positive. But you can see here the price does look overvalued based on the history of Skyworks. Let's shorten this time period. So you can see here it does look overvalued on Morningstar as well as the Fast Graph. So that's something to consider. Adjusted earning yield at only 4.15. We'd like to see this at 6.5 to 7 or higher. Dividend yield is decent at 1.43, which is better than the S&P 500. Again, very low debt. So overall, the company itself is really good, but the price is what's concerned me. I actually made a video of this company around this time period on April or May, and it was about $109, and I had it as a buy, and it's been up since then. But right now, I give it as a hold at current prices because the overvaluation, the earnings yield is low. The dividend is lower than the 5-year average. So that's a lot of things to consider. But overall, this company is going to be making a lot of money with the 5G revolution and growth with the 5G. So there you have it. Those are the 7 5G companies to look for right now. I personally own AT&T, Verizon, Qualcomm, as well as Comcast. Those are the 4 that I personally own right now, and Skywars Solution is one that I'm very interested in purchasing. But again, like I mentioned, I think it's overvalued right now. I would like to see it at around 110 and lower before I consider buying shares of this company. Nokia and Ericsson are 2 companies that I won't consider. They do present some potential, but I also think there's a lot of risk involved as well. So I'd rather put my money into these other high quality 5G companies like AT&T, Verizon, Qualcomm, Comcast, and Skyworks, which I think are better positioned. But again, Qualcomm looks to be fairly valued to overvalued. Skyworks looks to be overvalued. AT&T does look like to be undervalued. Comcast fairly as well. So there's a lot of things to consider. But these are 7 great 5G companies to look at. So thank you for watching, and I hope to see you guys in the next one. And make sure to check out my free ebook in the description below, and make sure to hit that subscribe button and like this video. And thank you for watching, and I'll see you in the next one.